you would be right that I am in shock and mourning over the horrible loss of life and devastation in Maui. I've actually lived over a year in Maui, well, 2 weeks at a time in over 25 trips there. My sister and parents lived there for many, many, many years, and I was over there all the time. And yeah, I have to admit that most of my Googling yesterday afternoon was to see how the banyan tree was doing. And so far, it appears that there's hope that it will survive the massive damage, but it was burned up pretty good. All right. Having said all that, the CPI print is in. The market is very happy, even because it was better than expected, even though it didn't quite hit my numbers. We'll dive into the details of both of those things as we get into this episode. This is Randy Kirk. If you like the morning show, hit like, hit subscribe, hit notify. Remember, you're going to want to see the Saturday morning show with Larry Goldberg. Not to say that the shows between now and then won't be fantastic, but that show is going to be off the charts. Okay, let's, and Patreon, you know what to do. You get a book. If you join at the $5 level, you get 2 books. These are audio books if you join at the $10 level. And of course, there's lots of now original content up there that you'll want to see. All right, the CPI report was almost spot on as to what the street said it was going to be, not what I said it was going to be. We'll talk about that later. The overall opinion came out after the print that the Fed will now definitely pause. Now, they can't say that because there's another PCE report, another CPI report, another PPI, 2 PPI reports, another labor report, all these things that got to happen between now and then. However, I think that they would be actually correct because none of those things are expected to be surprises on the inflation side, meaning more inflation or more difficulties that the Fed would have to address by another increase. So yes, I think that's what they are saying. However, those things do have to play out over the next month and a half before we get to the next decision by the Fed. Now, if you dig into the CPI report that just came out this morning, rather than just look at the headline number, which was good, and the core, which was actually slightly better than expected, you're going to find out that 40% of the increase, 40% was housing, was shelter. And we know that this is a lagging indicator. And we know that this is something that, according to Truflation, is in fact not moving up at the rate that the Fed, that the CPI reported this morning. So this should play out over the next couple of months. And that could be something that brings the inflation report, the CPI, PPI, et cetera, down to very close to zero, not even the 2% level. So this is what we're really going to be paying attention to. And housing, every indication, I don't care whether you look at, Case Shiller, you can look at all the other folks that are reporting out there, saying that housing is not going up at this rate, and certainly that rents are flat. Now, tomorrow could help us cement the good news of today on inflation, because tomorrow we get the PPI report. Now, the PPI report is, of course, what the purchasing managers are seeing in their pricing, and this is a leading indicator, and it has been much softer than the CPI the last couple of months. Well, part of the reason for that is there's no housing in the PPI report. So anyway, we'll see what happens tomorrow morning. The street is saying that it will be slightly higher than last month, but it will still be well under the 2% rate that the Fed is looking for. Now, if the narrative should, I'm expecting the narrative to, and we'll see, but we're hoping that the narrative now moves back to this idea that inflation and interest rates are under control. They don't have to think about that. They're not going to get worse, probably even getting better. And this will mean that the markets, the investors out there, I don't care whether it's retail or whether it's institutional, that these investors will start thinking more about the economy in general. How is the economy doing? Are we going to get this no bounce or no recession, or what are we going to get here? And there's people that are still saying we're going to get a recession in the first quarter, second quarter of next year because of federal spending, because the federal spending is out of control, and because therefore at some point you have to pay the piper. While I am sympathetic to that point of view, I do not see how we get into a recession within the next 12 months. I just don't see it. We don't have enough data to know what happens the end of next year, but next 12 months, I just don't see it with the wage increases, with the job information coming out as strong as it is. I just don't see it. All right. So real wages came in at 0.3% month over month and 1.1 year over year. That's really solid. That is really, really good news. And the Fed will be perfectly okay with that. They'll actually kind of like it. All right. So Elon Musk has a bunch of hobby horses. That's a quaint old timers phrase for a point of view that he's passionate about. One of those is that his factual statement that ESGs, now that's the environmental, societal, and governance policies or goals that companies are adopting, they're not designed. I mean, they are not going to help the companies. These are counter to the company's actual profits and gains in the future. Environmental, societal, and governance goals are dictated by an unelected group, and they are subscribed to by the mutual funds, banks, and other suppliers of money to businesses. And that puts pressure on these businesses to adopt these measures that have nothing to do with future profits. So Elon Musk has been very unhappy about that, as these companies are not only rated on these ESG principles by people like the S&P, Moody's, et cetera, but the methods that they use to judge them on these subjects are not transparent, as can be proven by the fact that tobacco companies and oil companies rank higher than Tesla. So he's been very upset by this. And guess what? He's finally had a big victory. The S&P has decided to part company with all things ES. Well, I wish I could say it was that strong. What they said is they will no longer publish ESG scores along with its credit rating as the company adjusts its approach in response to investor feedback. The update, which took place on August 4th, was triggered by expressions of confusion from investors who use S&P's corporate credit ratings, according to a person close to the process who asked not to be identified. Unfortunately, the S&P went on to say they referred to the statement in which the company said the update does not affect our ESG principles, criteria, or our research and commentary on ESG-related topics, including the influence that ESG factors can now have on credit worthiness. So in other words, in the back of their mind or in some part of their system, they're still going to be looking at these things with regard to valuing credit worthiness of companies when these three things have zero to do with the credit worthiness of these companies. So victory to Elon that they're not going to have a credit rating, a specific credit score with regard to ESG. Bad news is they continue to take it into consideration. Round one to Elon, but many more rounds left to go on this. While all eyes have been on India to take the big prize of a major Tesla factory in the not too distant future, multiple statements have indicated that Indonesia is still very much a part of the running to get a major facility as well. And then there's Malaysia, who appears to have won the honor of being Tesla's SEA Asia base. So are these three countries being pitted against one another in order for Tesla to get the very, very best deal? Well, of course they are. And then Indonesia got a little slap because they followed Spain and in talking a little bit too much about what has been going on behind the scenes. But they apparently are not out of the running and have been promised that they will be notified by the end of the year. Well, that's their statement. That is not something that has come out of Elon's mouth that we've heard, but they're saying that they will be told by the end of the year. And in fact, that an agreement will either be reached or not reached by the end of the year. I think that's probably strong. It could easily, as we know, with these kinds of things, go into next year. But what it really shows is that China is losing its mojo as the factory of the world. Okay, this is very, very important. The China story is getting bigger and bigger as their economy is slowing down, as they're having deflation problems, not disinflation, but deflation problems, as they're having real problems in the real estate sector, real problem with their young people not having enough jobs. So this is a huge thing to watch, is the China story, not only from the standpoint of how it's affecting China, but also watching Elon Musk, again, being way out ahead of the crowd in terms of looking for other places in South Asia in order to do manufacturing, to spread opportunity in terms of sales, et cetera, et cetera. Yes, Apple's out there too, and some other companies are definitely going that direction, but Tesla is way out ahead on this once again. All right, a quick word on the subject of people. A few people, believe me, most of you are not saying anything about this, but a few people are saying this, so I thought I'd bring it up. The question is, am I risking my reputation by making all kinds of predictions, including short-term predictions in the market? Okay, my predictions are mostly for fun. Please do not make investment decisions on them. They are, however, very carefully considered. I've been doing it my entire life, and I do think that they're worth a bit of credence. But come on, with regard to the stock market and individual stocks, including Tesla, I'm not an investment advisor. However, I've been watching these things and I spend huge amounts of time on them every single day. In fact, I would say that nobody, not a single pundit, not a single person that is asked to speak on Wall Street spends more time on Tesla every day than I do. Guarantee it. Okay, they can't, because a lot of these people that are in the punditry class are also following all kinds of other stocks. Well, I don't. I mean, I look at ARK a little bit, whatever, but no, basically I'm Tesla all day, every day. So that's number one. Number two, I have never, ever suggested selling Tesla or even selling the market. I probably never will. So you cannot lose money if you take my advice. But remember, my advice is not, don't take my advice. But if you did take my advice, you can't lose money, because you might lose money on paper, but you only lose when you sell. So while this is not financial advice at all, I am 98% certain that if you take the long play on Tesla, you will win big. Short of some ridiculous catastrophic situation, Tesla is still the best risk-adjusted opportunity I have ever seen, and I have been watching it for over 50 years. Well, okay, number three, when I'm right, wrong, or in between, pay more attention to how I got there. The key is in the analysis, the methods, the ability to arbitrage my knowledge compared to other investors. That's why I listen to guys like Rob Maurer, John Gibbs, Jeff Lutz, and it's how I choose the folks who appear on this broadcast. What can they teach me? So, for instance, my optimistic estimate on today's CPI report was based on looking back 45 days on what Trueflation has been saying. Well, that may have been too optimistic. It may be that I should absolutely only go back and look at 60 days ago on Trueflation in order to make the best guess about what CPI is going to do. So now I will modify my thinking on this on the future, because if I had gone back 60 days, I would have been much closer to spot on. So that's good news for Trueflation, good news for why you should be looking at Trueflation if you want to be ahead of the game. All right. The Dow I said the Dow would be up 500 points, and I suggested that Tesla would move up 12. Well, that was based on my optimistic assessment of the CPI, which didn't happen. So for Tesla to start moving up again, we'll need some positive news on Tesla, specifically because the narrative sprung a leak with 3 difficult issues over the last 10 days. Now we need some good news. I would expect a general upward trending, Tesla to be upward trending over the next weeks, barring any major news either way, a major bad news, major good news. I think it'll be generally up, and of course it is up this morning. So let's go ahead and take a look at where things actually are this morning. Where we are is Tesla is now up 7. So it's about half of what I said, and it might go up more today. Obviously, the Dow Jones is up 366. So that is, getting close to 500. NASDAQ up 176, S&P up 47. The rest of the Magnificent Seven are all up. All of Kathy Wood's stocks are up. So this is going to be, probably going to be a Greendale day, because there was nothing, if you dug deeper into the CPI, it was all good. There was nothing for later on for the stock market to go, oh, no, we didn't notice this. Not that I saw anyway. Now, does that mean that there won't be some profit taking later today? Of course, that's always going to happen, probably going to happen. All right, let's look at the rest of the data here, because these are important. I'm going to go a little more into detail as we discuss these today. So we have crypto up now in the mid 29s. So the news about PayPal apparently is not continuing to give it more strength. That was, good news for a day, but it's not continuing. The dollar has dropped after the U.S. inflation report. That is to be expected. We'll see what happens on that going forward. Gold is up, which is probably a reflection of the dollar being down. Oil is down below 84 again, which normally that would be expected to go up a little bit if it's just based on the dollar being down. So this is a double positive. So it's gone down even though the dollar is up. That's good. We have bonds also down under 4% again on the 10-year, and the 2-month, however, is up, making the spread greater on the 2-month versus the 10-year, and the 2-year is also down more than the 10-year this morning, continuing its trend to get closer to the 10-year, which has been going on for a while now. So those are pretty interesting numbers this morning, all very good for the market. So that may be what we're going to be seeing later today is a good market day. All right, with everything else that's going on and multiple negative stories, LK99 has fallen off the front pages, but I can assure you, I am still very interested in this potential breakthrough and will keep you updated. Brian and I will not continue to do this daily unless there is a significant thing that needs to be reported. But you should go back, if you haven't already looked at it, go back and look at my interview with Brian yesterday on LK99. The rest of that particular interview is pretty interesting as well. There is a card above. I still don't know which side it's on. I should really check that. So, I do want to take a minute, hit like, hit subscribe, you know what to do on all that kind of stuff, hit notify because of Larry Goldberg on Saturday morning, if nothing else. And then, of course, let me just take a minute to talk about the books because I want you to join Patreon. I really want you to get on board on Patreon. I'm shooting for 125 by the end of the month. So we've got the Elon Musk mission is now 20% old news. All right, 20%. Yeah, it's a big book. It's like 300 something pages. 20% of it is old news. Oh, yeah, that means 80% of it is still tremendously positive, good news. I've had people who have just read it this last month who are reporting back. One person said, brilliant. The parts that I didn't write are brilliant, but the whole thing is really, really great. You really should get the Elon Musk mission. Whether or not you join Patreon, you can get it for $3 or whatever on Kindle. But if you'd like the audio version, you can get it right now for free just by joining Patreon at the $5 level. Now, if you'd like to get 2 books for free, you can also get the Elon Musk method. And on this one, I dig into who Elon Musk is as an entrepreneur. What makes him the most amazing entrepreneur in history? What is it about him? 16 things that I could see that I could have done better in my career as an entrepreneur. Well, I'm still an entrepreneur. Look at all the businesses I'm still running, but 16 things that I can see in what he does that would help anybody become better at what they do. This doesn't just apply to entrepreneurs, people who are business managers, COOs, CFOs. This would apply to them as well. I highly recommend the book. A lot of the principles would even apply to your daily life. So everybody could read that book and get something out of it. When Friday Isn't Payday is definitely designed for people who are owning businesses or intend to own a business. So hopefully one day will own a business. How do you even make the decision to get into business? What are the things that you should take into consideration in making that leap? How do you make a business plan? How do you then execute on the business plan? What things should you consider with regard to what kind of business you go into? And then the rest that's the first 100 pages. And then from there on, it talks about how to run your business on a daily basis, cash flows, collections, how to buy and sell a business, on and on and on. It is the Inc. magazine called it the Bible of the small business world. Okay, and then making money out of thin air, CPA, MBA, and Shayla Chamberlain and I wrote this book together. She is an outstanding at all the principles regarding accounting and how you get to decision making out of your accounting numbers. You have to have the right accounting numbers. Most companies, out of the 400 companies that I've done consulting with, most of their accounting had bad numbers going in. Either they were the wrong numbers, they were in the wrong place on the P&L. Believe me, that can happen easily, very easily, or they were even doing a bad job of assembling the numbers that were going in. Then once you get them in, how do you interpret them? Most people don't even put percentages of sales as part of what they do when they're showing their P&L, and it's all about the percentages. I would say only maybe 5% of the P&Ls that I've looked at ever with all those companies that I've dealt with had the percentages in, and without the percentages, you cannot do the analysis like a doctor looking at the charts. You can do that if you put the percentages in. All right, so you get one of those books. If you join at the $5 level, you get two of them. If you join at the 10, these are the audio books, so worth $15 or more. And right now, of course, you can join and take a 7-day look for free and then make the decision after that. The book opportunity, the book offer, of course, is after you've actually started with the payment process. Okay, so that's all I've got for you today. It has been wonderful, wonderful, wonderful talking to you.